All right. Well, thank you everyone for joining the Rapyd Talks in partnership with Working Capital. This is happening in the Singapore Fintech Festival events. So obviously Rapyd has been running a couple of talks about topics around payments and fintech, and we will be also still hosting a couple of, Ask Me Anything sessions, and then talks about fintech and payments in general in the APAC market. So today my topic is about international expansion and payment localization. And throughout this presentation, I'll be walking you through the challenges of international expansion. So everything around what you should keep in mind when you go into a new market. Then second, I will be talking about localization and how it defines winners in markets where they go to. Afterwards, I'll be addressing the elephant in the room, the payments, how we localize them. And then I'll move to a digital content case study where we helped one of our customers to localize their payments. So we could all agree that there are many reasons why someone should, or a company should expand to another market. That could be around looking for new audiences, maybe finding local talents in other markets, or also, looking for new markets where you can have more growth. But the reason why everyone basically goes internationally is to get more revenue, get more, get more customers. And if we look as an example on the retail e-commerce business in general, it originated in the US, and the total GDP of that business today is about 3.6 trillion, and only 14% is contributed from the US. So if it didn't grow to all the other markets, we wouldn't see that all the other markets like China and India, Brazil, and in Africa also are driving the growth today in this specific industry. When we look at the challenges, basically, the first challenge that comes to mind is everything around law, compliance, and regulatory, and that's pretty self-explanatory in a way that, there was a business index that was published by a company called IMF, and this business index shows that the common must challenge between all the companies when they go to a new market is the regulation and accounting and taxes. And if we look at Indonesia as a market which actually ranked first in that business index, if you want to set up a business in Indonesia, you have to apply to about 11 permits for you to be able to run a business in Indonesia, depending on your industry, of course. Second is about language and local differences and cultural differences. So in terms of the language, how you adapt your applications, how you adapt your platforms to the local languages, and also catering to the local differences. Supply chain, distribution, logistics, and packaging, which is also self-explanatory. The local competition and market expertise. So what happens to a lot of companies when they go to a new market is that they rely on all the expertise that they have in the markets where they were established already without consulting with the local market expertise and also the local market talent. So that's where the challenge comes in, and most of the companies end up hiring people in the market so they can get access to all the, let's say, the insights of the market. And finally, payments, and that's what we're going to be addressing over the next few slides. So if we're going to talk probably a little bit about just from my experience when we were running an e-commerce shop with Rocket Internet, when we wanted to expand to Malaysia and start our business here in APAC, the first thing that we have seen is also around the law and compliance. So we had to hire local directors, which we didn't know of before moving to Malaysia, and also because we were doing business in the e-commerce space as an affiliate publisher platform. So we had to apply for a permit that is called from MDIC that allows you as a e-commerce business to operate and hire both local and international talents. In terms of the local languages and the cultural differences, we were initially running all our shops in English. And then we moved here. We had already the shops in English, but we are in a market that people speak Bahasa Malaysia, they speak Australian slang and then New Zealand slang. So we had to adapt all these languages first by translating all our websites to local languages and then translating to the slang. Why exactly? Our business was based on SEO. It was based on search. And we were about 5 to 7 in the search engine ranking pages. For us to move to the first page and the second page and get more revenue, we had to adapt to the local languages. And then afterwards, Google, that basically scraps all this kind of content that we have. We got pushed to the first pages and we got more revenue from there. In terms of the local competition, again, and the market expertise is about the talents. And on the payments, so we were collecting funds from about 7 markets in APAC, from MYR, IDR, PHP, and a couple of other, currencies. And what happened is that we have reconciled all of that into a Malaysian bank account. So 3 challenges we had there. One, we had only an MYR account, and then there was a lot of FX fees that were hidden and we didn't see by the bank. Second is that we had a lot of SWIFT fees, basically, because we were using SWIFT to collect our funds. So there were a lot of lifting fees that we could not see. And the third thing, basically, in terms of the payments also, is that we were paid very late. So it takes between almost 2 weeks to 60 days, depending on the banks, depending when the money was pushed, etc. Yeah, so now probably I'll take, I'll open the floor for discussion, and I would want to take this example of Grab and Uber. And I would just like to ask a question simply, what do you think made Grab win over the ride-hailing war in Southeast Asia? So if anyone wants to share any insights. All right, I'll go ahead maybe with Tom.
Well, I already know the answer. Obviously, I think Grab was able to localize.
You got a mic if you want to use it.
Okay. I think Grab, number one strategy was that they're hyper-local to this market. Mm-hmm. And I believe that also, I think Uber has a very bad track record working with the regulators.
Yes.
Right? Especially you see that in Europe, right? I think Grab knew that. I think that was one of the biggest lessons learned. I think their approach at this market in a very collaborative way.
That's actually true, and then basically it's the same thing that you mentioned in your last point about the law compliance and regulatory in general. When Grab started basically in Southeast Asia, they were getting the blessing of the regulators first, right? And they were working with the regulators to build the landscape of ride-hailing and basically be an advocate for public transportation in general. That's the first thing. The second thing that they kept in mind is that, there are a lot of taxi companies and taxi syndicates over the markets in Southeast Asia, and they had to keep that in mind and try to bring them revenue also, so they don't be also just a competition, but also partners. While Uber, on the other hand, they came with this approach of a platform. We are a global platform. We enter the market first. We allow people to start using it. Then they sought after the regulator approval. That's why also Uber had a lot of fines and a lot of issues with the regulators over time. In terms of the languages, probably it's very simple. Grab localized all their apps to local languages. So in Thailand, it was in Thai. In Indonesia, it's Indonesia, Bahasa, and English. So they had all the time the local language, so they can open the app to larger audiences, and they had also English. While Uber, on the other side, they had a very strong team that is centrally located in the US, and they designed only to English and the European markets. They could only adapt to other language a little bit later when Grab already had access to the market and they localized all their apps. So on the supply chain, distribution, logistics, and packaging, there is one thing that is probably common in Asia. In every country you go, you will find one city that is very congested, and then probably that's where most of the revenue from these ride-hailing companies is. And if you look at cities like Jakarta, Manila, Kuala Lumpur, Grab launched the Grab Bike there very, very early to cater to the local customers. And they also launched Grab Food. They launched Grab Express delivery over time, so they can help the customers to move things inside the congested city. While Uber, basically, they went with the premium 4 wheels in the beginning, and then over time they started adapting. But again, the go-to-market timing is a bit off because Grab was already there. They brought all these new products to the markets, and they got already a bigger market share in the market. On the local competition and market expertise, I think the edge that Grab has is that they started in Southeast Asia. They are local to Southeast Asia. They understood Southeast Asia better than Grab. And finally, on the payments, so if we look at, the population in Asia in general, most of the people use cash and bank transfers, except for Singapore that has a lot of people using, credit cards for their payments. All the other countries, Grab had to adapt to these local preferences of paying by cash. And they also helped the drivers basically to get paid to a wallet and withdraw the money instantly. While Uber on the other side, they were doing credit card and they wait to get settled, and then they settle to the drivers, which took a little bit of time. And the drivers had to have access to the money right away. And finally, they Grab also launched GrabPay. So by definition, all the Asian population, they like rewards, they like loyalty. So they launched GrabPay to help all the customers, pay with GrabPay and get rewards on that. So localizing payments is usually costly and confusing. The first thing that happens when you want to localize payment is that you have to integrate a lot of payment methods individually in each country. And that comes with two things, honestly. That comes with resources. So you will have to allocate a lot of resources to do that, which comes with a cost. And the second thing, in terms of technology, how can you adapt your technology around that? And probably the reason why that is happening is because most of the payment gateways are regional. So they have capabilities and they have coverage only in 2-3 countries. So they had to go to all these payment gateways in each country and then basically integrate one by one to get access to the payment methods. Obviously, the local preferences are volatile and they change over time. A couple of years ago, nobody would have known that UPI or Paytm or OVO or GrabPay would be a local preference as of today. And there are a lot of payment methods that require to have local entities to be regulated in the country in order for you to accept payments in these countries. And finally, it's about the FX cost and the risk that comes with it. So you have all the time to manage your FX in a fashionable way that allows you basically to have a treasury that is streamlined. And that comes as a challenge also. So let's take this challenge of payment localization. If you have a company and you basically have your headquarters here, and you want to integrate payment methods around the world. So this diagram that looks a bit of a spaghetti, what it says is that you have basically to open other local entities and have integrations everywhere in order for you to have access to all the payment methods. And if you take an example of Indonesia alone, so in Indonesia, we have OVO, GoPay, Alfamart, and all these brands are basically the payment methods that are used in the country as the best, right? So if you want to integrate each one of them, each brand of them, it will take you probably from the first discussion, commercial discussion, to the integration and going live, probably about 3 months per payment method or 6 months, right? And if it takes you that much time and you have to do each one alone, so it take you probably about 4 years to do all of this by yourself. So now let's think that you have, integrations with 3 partners and then or 4 partners across Asia. They settle to you in INR, MYR, and THB. You have different settlement times from each of the partners. And then what happens there, you have to reconcile all of that into your accounting, right? So again, 2 challenges. Resources, you'll have to put a lot of people to work on that to reconcile. And the second thing, how you can build a recon engine internally. So you need to know the technology. And that comes as a challenge. That's why there are a lot of companies out there that take all that burden and they do the heavy lifting for merchants to, streamline the reconciliation processes. And the last challenge basically is about fraud risk and all around that. So if you want to build basically a fraud engine, the first thing that you should think of is hiring a compliance officer. So most of the regulators, they will require you to have a chief compliance officer that is local to the country. The second thing is that you have to hire teams and capacities so they can monitor all the transactions. That's from the resources play. Now moving to the technology, you have to have a lot of integration. So you need to use third-party data providers. You need basically to map all this data with the tools you have internally, leverage AI, and build a technology around that in order for you to have a very trustworthy fraud engine. Now I'm going to move to a case study, but I'll probably take some questions if you have any as of now. All right, then I'll just keep moving with the case study. All right, you have a question?
So what's your perspective in terms of...
You'll have it.
Oh, sorry. So what's your perspective in terms of, let's say, the end game for all these local payment schemes? Because I guess even in Singapore, you're kind of overwhelmed when you go to a retailer, there's 20, and you're never going to use more than 2 or 3, right?
Yeah, that's a very good question. So if you see today what most of the central banks do, they try to consolidate all these payment methods, right? So today in Singapore, you can find that they have SGQR, right? So when you use SGQR, you can actually pay with the different payment methods that Singapore has, either Pay Now or Grab, etc., etc. And if we go to Indonesia, now they started the same thing with QRS. The same thing is happening in Thailand with Prompt Pay, and in Malaysia with Do It Now. So the way I see it happening over time is that all the rails will be consolidated by the central banks to have one scheme that can accept all the payment methods through QR, basically in Asia. Any other questions before I move on? All right, then I'll just move on to the case study. So the case study we have today is about a digital content company and a gaming company. And basically, they have three products. They have digital voucher and codes. It's a kind of a code that you buy, and then it gives you access to funds to put to your wallet. They have also a product that is direct top-ups to a wallet. So they have a wallet in their platform that you can use to top up and then buy in-app games while you're playing games. And then they have also mobile reload, which is all about reloading your balance for phone calls and for internet. And we had two challenges that we had basically to overcome when we needed to help this company. So the first challenge is about the end consumer themselves. So the way it happens is that we have a lot of gamers that are millennials or that are young people that don't have a credit card. So we had to cater to those people basically. And then also in the markets in Asia that we were helping this company with, the penetration of credit cards is not as big. So we had to give them different options of paying. The second thing is that they had access to cash via some stores, but it's very inconvenient that you are playing a game and then you have to stop the game and go top up your balance, then come back and play again, right? And then the last thing is that they wanted to keep using technologies that they are used to. So they wanted to keep using technologies like Grab, OVO, et cetera, et cetera. And the second challenge is all about the integration. When we asked this company how long it took you to build your payment stack over the last few years, it took them basically a lot of time to build that. And they were looking for someone who could do everything in one platform. And that's basically what Rapyd does. So the solution we offer them is one integration. So for people who are not familiar with Rapyd, we are a fintech as a service platform that helps companies basically to focus on their core products and their core activities and basically use us for all the other payment services. So we do all the heavy lifting of integrating payment methods around the world, reconciliation, settlement, payouts, and then we just let the companies focus on their product and use Rapyd for payments. So we have about 900 payment methods around 100 countries, and then we can hold a lot of currencies, about 65 currencies in our wallets. And in terms of the solution we offered this company is, as I mentioned before, they needed access to wallets, so we offered them wallets, and we allowed them to collect via GrabPay and GCash in the Philippines. In terms of the bank transfers, basically, we allowed them to do two things. First thing is virtual accounts, and these virtual accounts are basically dynamic virtual accounts that help them per single transaction, so they have access to automated reconciliation. And we offered them also RTPs, which is real-time payments. So they could pay every time, the gamers could pay every time, real-time. And we also offered them additional cash because they had a lot of gamers that are from some rural areas and they needed access basically to cash payments. So the results that we had with this basically customer, we helped them enable new markets, which is basically Korea and India, and we also helped them cut costs for about 90% of their payment methods. So they were using other providers that were probably charging them a little bit more, and we helped them to cut the cost by centralizing their payments and then their reconciliation engines. And thank you so much for attending. So if you have any questions, I'll be happy to take them.
I have a bit complex question, right? Because I think it's more of, I think, you already have such an extensive experience with Rocket Internet in terms of e-commerce world. Now you're with the Rapyd in terms of integrating payment into that, right? Mm-hmm. So as a holistic, when you add those two, and given the COVID, a lot of people now, most of them are driven to go online, even in brick and mortar shops, right? Mm-hmm. What will be your top 3 advice in terms of, okay, now all of a sudden I'm a brick and mortar shop in SMEs, want to go online and then actually present myself, in fact, expand beyond Singapore and address different markets. Obviously, you have an experience in both.
I'm sorry, just missed.
What will be your advice for some of the SMEs coming in?
So yeah, I think if there is SMEs that are trying to go online, I think the first thing that I would focus on is basically, when you are a brick and mortar store, basically probably you have already branded your company around the customers that you have and that you know. But then when you go online, it's a whole new world. So you have basically to market to new customers, right? So I would say the first thing is to work on the marketing, right? How you can put the word across that you opened, an online shop, and how you can go through different channels to let the people know that you are selling stuff online, right? The second thing I would focus on is basically payments, because you have to collect funds, and then given that you are a brick and mortar store, you need to have access to working capital, right? So I'll have to focus basically on payment methods that can be settled to me in a very fast way. And if I have to think about a third thing in terms of that, just given my experience, I know that the affiliate business brings a lot of the traffic, so I would probably ask all these companies to put their online shops in affiliate businesses like Shopback and then iPrice, Global Savings Group, etc., etc.
So again, from your experience, which of these capabilities would you build in-house and which ones would you outsource?
I mean, again, from my experience, if I'm coming from an e-commerce shop, I would never build anything in-house like this, to be honest. I would all the time try to work with companies like Rapyd or other payment companies that have already the stack built, but I would focus more on how I can get access to funds faster. That's what I would be focusing on. So for instance, if, let's say when Shopee started, and now they're paying Shopee Pay, right? They built all their customer base first, and they started doing all the payments until they got all the data from the customers, and then now they feel like it's the right point to put a wallet together, right? And if I'm starting as the brick and mortar, company that is moving to online, I'll try first to start with third party, and when I have enough data, then I can start thinking of building things in-house. Did I answer your question, by the way? Yes. All right.
You mentioned the QR codes and standards that various countries and governments are rolling out to somewhat consolidate like the different payment methods. Like, we'd love to get your opinion on how well these QR codes translate to the online world. I can see them working quite well in store, brick and mortar, but the experience is not as elegant, I think, when you translate it into the online world.
That's a pretty good question. So let me start by an example, and I'll answer your question, right? If you want to top up your GrabPay today, right, you can see that there is an option with Pay Now. If you have ever tried it, it's pretty seamless. There are two options you would do it, right? Either you're gonna like scan the QR code that they show you, or you're gonna save it to your library, and then you can top up through that specific QR code all the time, right? That is tied to your balance with the wallet. So it's very seamless if we think about it. If you compare it to something like, hey, I have to put a new card from scratch where I have to put all the numbers and everything, right? But if we look at it from our side with our customers today, at least during the COVID time, we find that one of our customers that is doing everything related to food, they use 90% of their payment methods is Pay Now, actually, because it's pretty seamless for them. And then they use one of our products that is called Hosted Checkout, so they don't have to take all the burden of building directly with the bank. They just put a link that redirects the user to our checkout, and they can scan and push the payment right away. And again, by definition, if you see most of the people, they want to have access, they want to have control over their finances, right? If you put anything related to a credit card, the direct debit, you're not very comfortable. While we're doing it with your QR, you just push the right amount that you need for that specific purchase.
So if you're a brick and mortar shop store and you want to go online, there's a few potential scenarios, and one of them, especially in Asia, that's very relevant, is going after and joining one of the marketplace operators. Would you think, like, which strategy is the best one, going into and joining the marketplace, and what are the advantages and possible disadvantages? Or should you actually go and try building your own store online?
I think, very good question, by the way, but I think there is no clear cut, right? It depends on your product and what you're selling. So if you are selling in a marketplace that is crowded with the same products, right, I would rather go by myself and build my shop and try to market it by myself, because even if you are there, you will find already a lot of companies or a lot of marketplaces like customers that have access to the traffic because they've been there for a long time. They have a lot of reviews which bumps up their traffic. And then also it depends on the meta search criteria that the marketplace has in place. So all the time, someone who's older in the marketplace, they will have access to traffic more than someone who's new to the marketplace. So that would be depending on the product, right? If I have a product that is not really so much, there is not much competition about that product in the marketplace, then I'll try to push it into the marketplace.
Actually, I want to have a quick comment on the QR code question you raised in terms of adoption. Actually, when you do pay now QR code through the online, it's actually authorization rate, the conversion rate is above 80%, very similar to credit card. And if it's driven to the e-wallet as well, it's above 70%. The reason is because of most of this payment using QR code is motivated by individual to pay, right? So that adoption has been growing exponentially. So in terms of adoption, it's here. I mean, it's already above 80% pay now. Some of the QR codes over 70%. And so it's no different than credit card in terms of authorization rates and conversion rates.
Any other questions that I can take? Well, then thank you all for joining our sessions. And then basically tomorrow and the day after, we'll still have our Ask Me Anything sessions, and we'll have a couple of other sessions that we will be running. But just right now, what's happening after the sessions, at 4 p.m., we'll have another session that is happening. So please feel free to stay, have a coffee, talk to people in Rapyd to know more about Rapyd. And it would be really great if we can have you in this session too. So thank you so much.